Okay, Chair, we're ready.
Thank you. So welcome to the virtual meeting of the Audit Committee of Northamptonshire County Council. This virtual meeting is also being broadcast simultaneously on the Council's YouTube channel. My name is Bill Jessup and I am the Independent Chairman of the Audit Committee. Before we start, some important online housekeeping for everyone present. Please ensure any mobile phones around you are silent. Please keep your microphone muted when not speaking and then obviously unmute to speak. Only one person should speak at a time and I as chairman will call those to speak and keep an eye on the room through my gallery view for those indicating they wish to speak. Before we move to the agenda, I'd like to do a roll call of councillors present to confirm attendance. Please indicate you're present when I say your name. Councillor Stephen Legg.
Present. Yeah.
Councillor Steve Osborne.
Present.
Councillor Bill Parker.
Present.
Now we have apologies from Councillor John McGee, but Councillor Scott is representing him. So Councillor Scott.
Present.
And we are expecting to have Councillor Irving Swift with us, but I think she's not appearing on the screen. So
The Chairman, as far as Cecile's concerned, I just wonder, I couldn't get in this morning because when I tapped the usual link, it wasn't highlighted at all, and I had to phone up the good lady to give me the link again, which it was highlighted and I could get in. I just wonder whether she has the same problem.
Okay, well, I wonder whether Paul, you might be able to just check that out with her. Brilliant. So
Yes, Chair, I'll do that now.
Right, so if you could do that, then I think we can proceed with the meeting because we're quorate, and we'll just note that Cecile joins us when she does. So in terms of the technical control of the meeting, if any councillor leaves the virtual meeting partway through for a period of time, for example, a lost connection, I'll continue the meeting unless we're not quorate, which is 3 councillors. If the meeting becomes inquorate, then it will continue as a briefing session for those members still present. No formal decisions or recommendations can or will be taken if the meeting's inquorate. Good, so let's move on to the substantive agenda. Let's deal with apologies. So we just need to note we have apologies from John McGee and Councillor Scott is attending in his place. We also have apologies from Duncan Wilkinson, who's unable to attend through illness. And Jacinta, you're going to front the items that were down for him to present. And I'm sure you'll do a very good job in his absence. Any members of the public wanting to speak? Sophia there? Well, I know the answer to that is no, so we can move on. I have no chairman's announcement. Cecile, welcome to the meeting.
Sorry, I had a problem. I could not join in. My link was invalid. Thank you so much, Chairman.
You've made it just in time, so we can mark you present. So let's move on to the minutes. Any comments on the minutes of the previous meeting?
Yes, please, Chairman. In the minutes, we have, can we have in due time, because we had action and now we had 2 things. Some officers should have been recruited. 2 key officers should have been recruited to help with the audit, as had been done. And also for the internal audit update, I hope that later we will have that. And yes, Bariska advised that there will be an interim director of finance operation and a chief accountant. So I would like to see if those people are in place because they will help immensely with the audit.
Barry, would you like to comment on that, please?
Thank you, Chair. I can confirm that recruitment was taken out and we have a full team in place now, including it should be an Assistant Director of Finance Operations and Chief Accountant.
Good. Any other comments on the minutes?
Could I ask, Chairman, about page 10 of the minutes? There was a reference to the work and actions of the Pensions Committee, but for information, I'm also a member of the Pension Committee. Does that have any bearing on my ability to make decisions?
No, I think that's fine. I think Bill, you're also on the Pensions Committee.
I was going to say, we did actually declare that at the meeting, Chairman.
Yeah, and I think once you've declared it, that's kind of recorded forever. So
that's right.
Thank you, Bill.
I'm also on the Pensions Committee.
Oh, okay, Bob. Right.
Thank you, Matt.
All good men. Any other comments on the minutes? Okay, so we just need to record approval. So again, we'll just go around those present just to indicate that you're happy to approve the minutes. So Councillor Irving Swift.
Yes, I am happy.
Councillor Legg.
Agreed.
Councillor Scott.
I wasn't here, so I'm not able to comment, Chair.
Okay. Councillor Osborne.
Agreed.
Councillor Parker.
Agreed.
Perfect. So I think we can take those as agreed then. So moving on to item 6, which is the 1920 annual audit report. Now this is obviously authored by Duncan as being the Chief Internal Audit Officer, and it is his opinion. So I'm going to ask Jacinta to present this in a minute, but it may be because A, she didn't write it, and B, it's not her opinion, that maybe that the one or two things that she isn't able to answer. If that's the case, we can just carry those forward to the next meeting. But Jacinta, would you like to present this item, please?
Yes. Thank you, Chair. The opinion is obviously a statutory report, and on page 20 we have Duncan's opinion, and for 2019-20 this is a satisfactory opinion, which is an improvement on the opinion for 2018-19 and 2017-18, which were both limited. In the context of the turbulence that the Council has been and is currently going through, this opinion reflects the direction of travel of an improving controls environment during the year. I think Duncan's view is that this is not, it's not the best in class, but the opinion is a balanced view that acknowledges clear improvements during the year, but also accepts that there are some issues of concerns that still needs to be addressed. The factors that he took into account in arriving at the slightly improved opinion: during 2020, there were strict expenditure control measures in place throughout the year, which to a lesser or greater extent contributed towards the lifting of the Section 114 notice. The risk management framework was also fully developed during that year and was actively monitored and maintained by the leadership team. We also noted that there was development of a process proactively monitoring progress on implementation of recommendations, and it was looking at recommendations from various sort of audits, inspections and reviews undertaken at the Council. That process involved scrutiny by leadership team and also by this committee on regular basis. Also taking into account that Ofsted had 3 visits during the year for the children's services. On 2 of those visits, the conclusion was that children's services was inadequate, but a visit undertaken in January, middle January 2020, did conclude that there were notable improvements in the service for vulnerable children. From an audit point of view, I think we also concluded that there were fewer limited assurance reports produced this year. And while we acknowledge that the plan wasn't completed, indications from the audits that were ongoing when the plan was suspended are that we would not have been as many limited assurance opinions as last year or the year before. And I think we've also got to acknowledge that management during 2020 have been fairly active in highlighting sort of areas of concerns and working quite closely with internal audit to look to resolve the control areas issues. Obviously, we would aim for an opinion of good, but I think there are ongoing areas of concerns that make this opinion not good. So, for example, Duncan took into account risks to controls posed by sort of the high levels of changes that the council has been going through. Obviously, changes in LGSS, we had some services being repatriated midway through the year, and obviously at year end, that's still been ongoing. There's also been quite a turnover of senior management during the year. I know that's kind of settled down at the end of the year, but there was quite a churn of senior management, which it was felt kind of leads to a lack of continuity of perhaps embedding and enforcing some of the controls in place. There are ongoing issues with sort of non-compliance of controls within ERP, which is a key financial systems of the council. And this is potentially having an impact on sort of the external audits of the council's financial statements. And finally, it was felt that the impact of COVID, which has interrupted year-end processes, cannot be ignored. So with a lot of staff working from home at the moment, it kind of reduces the effectiveness of controls at the year end when a lot of sort of work is being undertaken. That's been severely interrupted by COVID. So overall, we think the opinion is as it should be. The annual report also needs to comment on internal audits, compliance with public sector standards, and from review of our charter and the manual, which was brought to committee at the last meeting, I think we can conclude that internal audit is being compliant with the standards. That's as far as I was going to say on the report, Chair. So I'm happy to take any questions.
Okay, thank you very much, Jacinta. Any questions, any observations that people would like to make on this report? It's an important document for us because we as a committee are responsible for overseeing internal controls within the council. And you know, what we rely on for our judgment is actually this document. So it's an important document. I think, just to set some background to this, that obviously we would always like the very best rating that we could have, but a satisfactory rating to me is a good measure of progress, bearing in mind where we've come from. And I think it's generally acknowledged, and external auditors have said this in relation to the accounting processes, that to go from a not very good situation to a good situation takes about 3 cycles. So this is the first of 3 cycles. So we wouldn't expect to get all the historical issues cleared out of the way and get to a fully good rating probably for 2 or 3 cycles. So any comments or questions from anybody?
Yes, if I may, Chair. Bottom of page 25 and then continues on page 26, where we're talking about outcomes and values. Can we confirm that the 89,000 was actually recovered? Because it doesn't seem to fit with the wording next to it, because we didn't seem to want to take the matter too far regarding criminal procedures. But can we be confident that the 89,000 was actually recovered?
Jacinta?
Councillor, I'll have to take that away and talk to the fraud lead and get back to yourself as to whether that's been progressed.
Okay, thank you. Cecile?
Yes, thank you. Well, it's very sad that Jacinta has to answer, because it's not her writing, no. So that is maybe an added complication. because it's always very difficult to answer for somebody else writing. Now, what, I don't know how to put it, but suddenly COVID seems to have taken over our life. But with audit, we are talking of 1920. So, and the all COVID started on the 18th of March. So before that, everything should have been going well. So can we be reassured that, because for me, as you say, it's a very important document, but we are going to be a unitary council on the 1st of April 2021. So can we be reassured that we are in the best position possible for our internal audit? Because without that in place, I don't know how we can have stable basis in for the new unitary. Thank you.
So let me just give the starting answer on that, and then Jacinta, if you want to add to this, by all means do so. So this document that you have asked the question on really relates to the period up to March 20, and the relevance of COVID to this particular document is that, as you recall, the way we work the annual audit cycle, it sort of runs up to April. And so what we did in agreement with Barry and the commissioners was that there was the, if you like, the tab end of the audit program, which we decided to abandon because we couldn't complete it because of COVID. That's a particular point that's made in relation to this report. Now, your general question is a very good question, and I think actually what you should do is raise that in the context of the internal audit quarterly report, because that's where the question is applicable. Jacinta, do you want to add anything else to that?
Let's see if I can get. Yes, Chair, I think the annual report, the focus was not on COVID. I think COVID, as I said, only impacted the year-end processes, and it's kind of acknowledging that a lot of financial processes and a lot of year-end processes were disrupted. But a lot of the other factors which I discussed did not sort of relate to COVID. In terms of the annual opinion, we've very much focused on what's gone on in the council from April 2019 to March 2020. So all of the factors that I sort of listed out were things that happened pre-COVID. But I think it would be remiss to ignore the impacts of COVID at the year end.
Okay. Cecile, you just moved on my screen. Did you?
Yeah. Well, it's just because what I find a bit frustrating is in page 21, when we acknowledge the risk, and we knew about LGSS, we knew about the movement in the top tier of a manager, and suddenly we have COVID. I think for that part of the things, COVID is really much at the bottom, and it should have a mention, but not as the third point. That is what I am a bit querying a bit, the question. We cannot blame everything of equal things. I think the two first point are the key point, and added pressure from 18th of March due to COVID, which had an impact this year, but it should not, for me, it should not have been mentioned too much in that document. Thank you.
Yeah, I think if Duncan was here, he'd actually broadly agree with what you're saying. I mean, it is the third point, and it is the least important of three, but it's one of these things that you cannot not mention. Any other questions or comments on the document?
Yeah, I have my hand up, Chair.
Right, Barry, sorry, I can't actually see the blue little hands on my screen, so if you do want to speak, give us a big wave. Barry?
It's just to clarify the COVID situation, and I don't want to sort of overegg this, but we need to be clear about the impact it had. COVID hit in January when it was first mooted as a But if you remember, lockdown started in March. Councillor is right. Councillor Irving Swift is right. But between the end of January and during February, and certainly ramping up to March, the whole council was required by the government to essentially drop what it was doing and establish the response to COVID, including all of the cells and the services feeding into those COVID cells. And at that time, we were estimating very big numbers in terms of loss, and on the back of that, we received over £40 million of the grant. So whilst I would agree that the impact in terms of the public impact wasn't felt until March, certainly the impact on the council was felt all the way from the end of January through to the end of March, and it was quite a big impact as well.
Thank you, Barry. That's helpful clarification. I mean, it is easy for us to forget what you guys are doing behind the scenes. Any other, Bob, want to make a comment?
Yes, Chair, on page 33, we've got payroll suspended in progress, item 54 and 61, another item, the IT item suspended in planning. That was the position at the end of that year, 1920. Has any work been done on that since?
Yes, Chair. We did pick up the key financial audits again and revisited them, but a decision was taken that given that we are more or less looking to start the financial audits for 2021, we're going to roll the reviews into the 2021 audit and revisit, because there's been a last lag in time in terms of we started that and then there was sort of a long lapse of 4 months with the lockdown. So we are looking to incorporate that within the reviews of this year. So yes.
Okay, I mean that'll obviously have an effect, will it, on 2P transfers?
No, the audit shouldn't have any effect on chippy transfers.
No.
Okay, thank you.
And Cecile, so you've got your finger up?
Yes, just what Jacinda just said is quite important, because it's appear in the later part of the audit report. It's quite clear that due to the COVID, everything will be tried. If I understand correctly, 2021 is going to be a year that will start between 2 years. Is that right?
For the key financial audits, yes, Councillor. We obviously are doing a risk assessment because some of the audits that were suspended, we will not be looking to go back and revisit those. Based on a risk assessment, we might do some more, but definitely for all of the key financial systems, we will be looking to go back and revisit what was started at the year end of 2019-20 and look to incorporate transactions from that year within the reviews we're doing for 2021. So yes.
Good. No further questions or comments? Excellent. So the recommendation is that we note this report. So if I can just go around members just to confirm that you're happy that we do that. So Councillor Irving Swift.
Yes. Do we note, and could we put some text, or we just note it?
I think we should just note it, frankly.
Okay.
Because the comments will be recorded in the minutes, so there'll be a record of those.
Okay, so we note, and I think we should note also that because it's Jacinda who present the report, maybe it's sad not to have our chief auditor.
Oh, sorry, Cecilia, you weren't with us at the time, but Duncan is off ill. So
yes,
it's not that he.
No, I know, but it has an impact of the way the question cannot be as fully answered if it will have been, and it's unfair on Jacinda's to regard. We do understand why we are here, but I think it should be noted because maybe the questioning is less robust, because I think it's unfair to ask Yacinda a lot of questions. Thank you.
Okay, but you're content to note the report. Good. Councillor Legg.
Noted.
Councillor Osborne.
Noted.
Councillor Parker.
Noted.
And Councillor Scott.
Noted.
Good, thank you very much. So the next item that was on the original agenda it has been withdrawn, which we've discussed prior to the meeting starting. So we can move on to the 2021 Internal Audit Plan and Progress Update. And Jacinta, would you like to present this for us, please?
Yes, Chair. Thank you. Yeah, this report again shows what we feel is a reasonable position in terms of progress. Again, I suppose I know the councillor says we shouldn't keep mentioning the climate we're operating in, but for 2021, I think committee needs to be aware and just take note of the fact that the team have been auditing remotely for the most part, and that's coupled with sort of client officers working remotely as well. So auditing has been made really difficult because everything's having to be done remotely. We've also got to recognise the levels of uncertainty and pressures on sort of client officers during the year has made it fairly difficult to sort of agree start times. But, you know, we're all sort of working as hard as we can to get the agreements and to get things moving on. So there is ongoing discussions as well with sort of the Children's Trust, which has gone live. There's issues in terms of the accelerated preparation for the new councils, which continues to sort of pull on resources, both from the audit side and also from the client side. So really the current climate is not the best time for doing audits. But again, as I say, we are making progress, and we think it's a reasonable progress. I'd like to notify committee that since the report was produced, the level of progress in the audit has increased from a level of 59% to 73%. So the report at the moment at 4.8. Sorry, Chair, I haven't got the report in front of me.
I think you're in the right paragraph. Yeah.
4.8, which was showing 23% draft, 36% in progress, and 41% not started. As at the 4th of December, that has moved to 31% draft or final, 42% in progress, with 27% not started. This has obviously been achieved through concerted efforts by the team, the IA team. We've also retained the services of our agency resource, and there's been a very directed and focused use of shared services team and also the framework resource. While the plan is flexible, and we try to keep it flexible, the number of planned days during the year has been a constantly moving feast. Committee will note that for the second time in a row, we are reporting a proposed change to the plan position in terms of number of days and the audits. And I think this reflects the challenge of trying to balance several competing demands on the plan. The report does note that we are aiming for 700, we're aiming to deliver 700 days for the sort of 4 months from December to March, which is fairly optimistic. But I'm not sure that we can sort of benchmark that against what's been achieved in the last 2 months. Primarily looking at sort of the achievement in the last month, where we've moved the progress quite significantly, gives us confidence that we will do that. We're also hopeful that as the picture with the sort of future councils becomes clearer, less time will be spent in terms of consultation, dialogue, and perhaps we can focus our resource a bit more on delivering of audits. And there is also generally the big push at the year end. As a team, we tend to push ourselves thinking it's year end. So we are hopeful that a good chunk of the 700 days will be achieved. but delivery of the plan will undoubtedly be impacted by the ongoing discussions. At the moment, there isn't real clarity as to whether the shared service has responsibilities for providing audit and assurance to the Children's Trust, to the unitary councils. We are going to be their auditors in the future, but at the moment, they are sort of looking to us to sort of give them something as well. So it's trying to get that balance, which I think will probably impact on sort of what plan days or how we deliver the plan. In terms of plan changes, just to give you a background as to why we're looking at changes. Let me see, where are we? We are pulling back on some of the COVID-19 audits that we're proposed to do in recognition of the fact that there has been a second wave and we've got the tier system in place, and it was just felt now was not an ideal time to be pulling the resources away from responding to the pandemic at the moment. So those specific audits, it's proposed to withdraw those. In consultation with management, and I think with the chair as well, we're looking to introduce an audit on the financial implementation plan. The implementation of the audits is being reported within the action tracker on a quarterly basis to committee and a monthly basis to the leadership team. But we're looking to do an independent review just to establish embeddedness of the controls and how the progress is actually going on during the year. We are also looking to introduce a financial review of sort of the closed down arrangements for the council, and we're hoping that this will act as some kind of a bridging review for the new councils and obviously the closing off, proper closing off of the county council. So we'll be looking at sort of the governance arrangements over the disaggregation process, the robustness of the close off procedures potentially, and perhaps looking at sort of the reconciliation procedures and how robust and accurate those are. So those are the sort of the key main reviews that we're planning to introduce to the plan and the ones we're taking off. I would just say to committee at 6.2, the risk scores do reflect the scores as at October 2020. I think we forgot to change the date from August. I was going to leave it at that, Chair, and just ask if there are any specific questions.
Okay, thank you, Jacinta. I'm sure there'll be many. Stephen, did you have your hand up there?
Sorry, did you speak to me?
No, I was actually looking at Councillor Legg, but I can't see whether he's got his hand up or whether it's...
Yes, I did. Yes, I was trying to unmute myself. Sorry about that. It's moving around. The cursor is a bit beyond me sometimes. I just had an observation about the sort of organisation of all this. As I sort of understand, the internal audit is a shared resource between different councils, and it seems to be going to be run by Milton Keynes Council on our sort of behalf, and then it's going to be hosted after March by West Northamptonshire, and North Northamptonshire is somehow going to get some sort of benefit of it as well. It seems a really perverse way of running an internal audit operation. And I mean, all of our principles of unitary of command and unitary of direction seem right out the window with this sort of organisation, coupled with the fact that we're told as well that we're short of a chief auditor and we're short of senior auditors, and we're relying heavily upon shared resources from other councils. I mean, it seems to me a complete miracle that we're managing to do anything at the moment. Thank you.
Barry, I was going to ask you to just give us a bit more detail around paragraph 422, which is the description of the lead authority model. If if Duncan had been here, I think he could have answered this well. But you're probably better placed than this, Jacinta, just to give us a bit more granularity around how this model works, particularly in relation to the next few months, because that's really our prime concern. And then, it's up to others to read from that how it would work in the context of the two new unitaries. So could you help us there, please, Barry?
Certainly, Chair. I think the context of this is that Northamptonshire, as Councillor Lake correctly points out, is currently in a partnership model with Milton Keynes and Cambridgeshire on the delivery of audit services. And that arrangement is watertight and will innovate over to the two new councils. It's no longer LGSS because LGSS has been disbanded as of December this year. So it is a lead authority model, and Milton Keynes will be the lead authority for delivery of audits between West and North Northamptonshire, Milton Keynes and Cambridgeshire County Councils. And now the employees that are currently in internal audit will still be employed by those sovereign councils, West and North Northamptonshire. They will just be managed by a lead authority manager. And that will be the Chief Internal Auditor at Milton Keynes. The responsibility for negotiating and delivering the audit plan and the number of days around that will be down to the individual Section 151 officers in both North and West Northamptonshire. So they'll be picking that up as we come closer to April 2021 and agree an audit plan with Duncan and Milton Keynes. And I think obviously the staffing issues are being dealt with by Chippy from sovereign councils, both in Northamptonshire and the districts and boroughs. And the assessment of the resource will be then made against the proposed audit plan, and the model will then staff up accordingly. I'm sort of stretching the boundaries of my responsibility here because of Section 151 of Northamptonshire County Council. Obviously, my responsibilities only go to the 31st of March, but as you would imagine, I'm still involved in making sure that the arrangements for audits post-April are in place and robust. So in that way, I'm liaising with both Janice Gotts and Juan Henry in the two new unitary councils as Section 151 officers, and also talking to Duncan and his team as well to make sure that the relevant access is in place, not just here, but in the districts and boroughs as well.
Cecilia, I think you have a question in relation to that.
Well, two things. First, thank you, Jacinda, to update us on the progress of audit, because strangely we went to 31%, 42% and 27%, which is good. So that means, if I understand correctly, that you must have used quite a lot of your 700 days of audit.
Sorry, Cecile, can I just interrupt you a minute? Can we just stick with the point about the lead authority model so that we can clear that up?
Sorry. So I can go back to that.
Yeah.
About the lead authority model. If I understand correctly, for us, what is important is that we clear the audit, but audit always look at what was at the past to ensure the future. So are you happy that with that new model, despite the odd arrangement, as Councillor Lake said, we will do the best for the two new unitary council? Do you think anything will emerge from that, what you're finding for the two unitary council? Thank you.
Barry, do you want to comment on that, please?
I'm not quite sure what to say, Chair, in that, as I said, obviously there are lessons learned from this authority that will be carried forward, but it will be down to Janice and Martin as Section 151s of West and North to agree both the focus and content of the audit plans for the two new councils.
I think the important point to remember is that however the internal audit services are provided, whether it's by own employees, some variant of LGS, lead council model, or even an external auditor, it seems to me the guy who is ultimately responsible for the provision of internal audit services of the council is the CFO. So, Barry is the guy who is responsible for the provision of these services wherever he chooses to get them from, up until the end of March. So shall we move to Bob? You had a question on the report, and I think I saw your hand next. I think you're probably still on mute.
Yeah, first, thank you, Chair. Firstly, I was a member of the LJSS Joint Committee, and that's recorded. So I just wanted to remind people of that on this item. And secondly, on item 422, it gives a date of March 2012 instead of March 2021.
You're quite right. And any other questions on the report? Cecilia, I think you were heading towards another question.
Yes, now I put, because I have my on page 76, at one point I couldn't find it now, and my eyes are not very good this morning, sorry, but we have, you say, you use the phrase, we have some distance to, and for me in audit, the some distance, I don't know what it means. We have some distance to go. So what is your assessment of some distance? And it was somewhere in page 76 or 77. And unfortunately, I cannot see, because with what you said, with the progress we have made, have we closed the gap of the some distance for our audit? Thank you. I don't like the term some distance to go. I think we should be more precise in audits. That's all what I want to say.
Jacinta, do you want to make a comment on that, please?
I suppose when I use the word some distance, in the sense that we, at the moment, are reporting that only 27% of the plan, as was approved at the last committee, has not been started. So overall, 73% is in progress. And having started them, we are quietly confident that we will have those to draft stage by the end of the year, and potentially have started the remaining 27%. Don't know.
Could I make a suggestion that in audit because what you say is very clear now. So instead of using some distance, you put the numbers. So like that for us, it's much easier to say right away. I find that, and I could not find it. I put it on writing. I think it's quite a dry subject, and the drier and clearer we make it, I think the easier it is for everybody. Thank you.
Okay. Any other questions on this report? Okay, well, I've just got two by way of absolute clarification. The first is, it does seem to me that there is a lot of work still to be done, as there always is, at this phase of the audit year. And we've still got a lot of challenges around local government reorganisation, COVID, etc., etc. So I just want to be clear that there's nothing that we're worried about which would lead us to think that Duncan wouldn't be in a position to give an audit opinion. The truly answer to that is that we fully expect him to be in a position to do that.
And I think as a team, we are working towards him being able to give an opinion. But what the impact on staff will be for all the sort of the 2P issues that are ongoing is unquantifiable. But the aim is to enable him to give an opinion. We are working towards achieving a good portion of the plan.
Good, thank you. And this is really one for Barry. Again, in this document, we get a list of the corporate risks, and I think we had all expected that these would be changing rather more significantly than they have. In fact, they haven't changed at all since March. Now, I know that risk management is very dear to the Chief Executive's heart, so I know what the answer to this question is going to be. But Barry, can you just give us, as a committee, absolute assurance that risk management remains one of the top agenda items for the management of the council.
Certainly, Chair. I'm not quite sure what's happened here. Maybe it's a timing issue because, from my personal knowledge, of a major risk of financial instability, I personally went in and reduced the likelihood of that, because obviously with 3 months left, the likelihood is a lot lower than it was last March, but the impact is still very high. So I think there's a timing issue about bringing this back to committee at a later date, because I know for a fact that some of these risks have been changed downwards in terms of likelihood, certainly. So it is at the top of the agenda. I know that corporately NLT have revised the strategic risks, and I say perhaps there's been a timing issue between the report being written and those risks being changed, but I know for a fact that they have been marked downwards.
Good. Okay, well, thank you for that assurance. And so we would expect when we meet again in February, we will see some revised scores.
Just to be clear, Chair, obviously the impact of a risk will still be very high. It's just the likelihood is reducing as we reach the year end.
Yeah. Good. Okay, so what we're asked to do with this is to note the report, including the risk register. So are we all happy to do that? Let's do the round robin again. So Councillor Irving-Swift.
Yes, with what Barry and Jacinda said, and if that is well reported, that would be great. But it's sad to know that, as you said, that the risk hasn't changed. I didn't want to bring it up, but I'm glad, Chairman, you did. But maybe from time to time, as a committee, we could have just an email with a change of risk, so we know it's done. That will give us maybe nothing long, just an email to say we have reviewed, that is a new state. It might give us a bit more reassurance for the last 3 months or 4 months of our existence. Thank you.
Okay, well, we'll see if we can facilitate that. So
I think that's sorry, Chair, I've just sort of reread that table as well. It does say that the risk scores are recorded in August 2020. So
you're right, Barry. It does say that in the report, but earlier on, Jacinta said that actually these were the scores at October. So let's just say at some point,
and the NLT changed the scores in November, so there is a time issue. But yes.
But perfect. We've got it all squared away. Councillor Legg, are you content to note it?
Yes, noted. Yeah.
Councillor Osborne.
Noted.
Councillor Parker.
Noted.
And Councillor Scott.
Noted.
Good. Thank you very much. So that brings us on to the action tracker. Jacinta, do you want to present this again?
Chair, I wasn't planning on presenting this report. I think Barry normally presents the action tracker.
Okay. Barry, would you like to make a few comments on this?
Okay, Chair. As members will be aware, we consolidated all of the improvement plans for the council into one corporate action tracker. And actually, as we head towards the end of the council, some of these are being replaced by subsidiary actions that will carry forward into the 2 new unitaries. So specifically, the Ofsted actions will be inherited by the trust as part of their improvement plan. And I know we've just had an Ofsted monitoring visit, which will bring other actions which need to be included in that as well. It was a very positive Ofsted monitoring visit. And in terms of the ISA 260 action plan, that will be replaced by the new ISA 260 action plan from the 1819 audit, which will carry forward into the 2 new councils. So whilst if they're all still live and we're all still working towards completing the actions on those plans, it's just a recognition that it's very fluid as we move towards the end. And some of these will be replaced by other action plans coming out of more up-to-date inspections and reports.
Any comments or questions from committee, Cecile?
Yes, you know, you look at that and it's the writing is very small, it's very long, and it will have been, as I said, I like all those trackers, but we should have weight. So we should have that, and for the next unit is more important. But the most important action at the beginning and after, because frankly, I have to admit, I haven't read in details, because you lose the will to live at the end. So you pick up, and the thing is, what I want is in few minutes to be able to see what has been working, how well it has been working, what is noted. But with there, we are thrown the whole book, but we don't have any way of knowing what has been well done and not well done, except if we go line by line, and after a while you don't know if you are dreaming or if it's right. So Barry, can you in two things said, how does you think it has worked, and what is 2 or 3 big success and things, the 3 things that you think are going to cause us problem, and in terms of impact financially, because you have, or reputation, it has to be a huge impact, because that would be helpful for us all. Thank you.
Barry?
It's a good point, Councillor Irving-Swift, and I think when we bring the last version of this to Audit Committee, I think we'll take out all of the complete actions, because if they're complete, obviously there's no point in further discussion on them if they've all been noted as complete. And the incomplete ones, as you say, will carry forward into the 2 new units. In terms of what are the top 3, I think you couldn't help but recognise that the council and the new management team and the commissioners has made considerable progress since the bad old days of the first inspection report. However, there are still, as we've gone through in the AGS, and we will see from the EY report, still things in the control environment that need to be addressed, and they will be carried forward to be the 2 units to address. The original Max Keller report said it would take 5 years to turn the council around. We're in year 3 of 5 years. We haven't fixed everything. I wouldn't pretend that we fixed everything. So there are still some of those areas within that control environment, and in terms of grip and discipline, which still need to be addressed as we carry forward into the 2 new authorities. Clearly, a lot of change has happened in a very short time. Setting up a new children's trust in November and establishing 2 new unitary councils will disrupt and change. It's been very, very carefully managed, but that will still be a key risk as we move forward into 2021, just managing that change and absorbing the impact of that change and making sure that everything is delivered in a safe and legal way. And clearly, COVID will impact finances, particularly business rates. All councils are funded by business rates. The pandemic is having a huge impact on businesses. Lots of businesses are closing. So whether business rates is still a sustainable funding mechanism for councils, and the impact of those bad debts and business closures and bad debts and council tax as well, I think will be a huge issue for all councils going forward.
Any other questions or comments on the action tracker? So what I would say about this is actually, compared to where we were sort of 2 or 3 years ago, there's huge progress going on here. And the one thing I actually love about this is the openness of management, in the fact that they're prepared to make this sort of information available, not only actually to us as a committee, but actually it becomes a public document. And it's by having these openly discussed that it promotes a circumstance where improvements will actually happen. So I think it's very good from my perspective. There's a lot of progress here. I take your point, Cecile. For us, there's a lot of detail. We don't really need to go through the detail. We just need to know that these are improvements and are being made. So again, we need to note this report and also the progress that is being made. So let's just do the roll. Cecile, do you have a question?
Yes, I think Barry made a very good comment that we are in the process of 5 years and we are just on year 3. So there is still high risk in some area, and he mentioned the 2 big risks. And I think that is important. Now, you say that in openness, it's very good to have all that report in front of us, but I would say it also sometime when you read it, you get confused. So if it's not simply written, and I find it's counterproductive because we have so many risks, especially with the Children Trust. So I would say that we need to balance this openness with also an efficiency. So not too much, but not too many. And I think we are so frightened of anything that maybe now we are in the machine is feeding the machine. So I would like maybe for the unitary to have something that is a little bit simpler, because the risk should, when we have a good risk management and risk register, it should be easier and easier for everybody to read and less written text. Thank you.
Yeah, you're actually slightly confusing two things, because you're talking about the risk register as opposed to this, which is purely an action tracker. You know, I agree, if there was a little executive summary on the front, that would probably make our lives easy, but I don't feel management necessarily obliged to make our lives easy. So are you happy to note the report, Cecile? Right. Councillor Legg?
Yes, happy to note.
Councillor Osborne? Councillor Parker?
Noted.
And Councillor Scott?
Noted.
Good, thank you very much. So 10 minutes early, we've arrived at, I guess, what we might think of being the main meat of today's discussion, which is the E&Y update report, which came out a couple of days ago. Steve, over to you. Would you like to take us through this report, please?
Certainly, thank you very much, Chairman. Good morning, committee members and officers. Right, okay. So this is entitled a progress and update report, but we've written it in a style and in a format which will look very similar to our ISA 260 that we aim to produce for the February committee. So it will have a lot of similarities in it, and there will be wording that you will see in that final ISA 260, which will also be here. What I wanted to try and do was to make sure that in what is the final ISA 260, you know, you weren't getting sight of absolutely everything for the first time. So we've gone into some detail here about the progress that we've made, where we may have identified some issues to start with, and where there is work outstanding, and what I would propose to do in the final ISA 260 is try and provide that as an update when we get into February, and not regurgitate information we've already gone through, because there will still be a lot to take in at that particular point in time. So I think at a high level, in terms of status of the audit since the last audit committee, and certainly since we re-engaged with the authority in September, there has been a huge amount of work and effort on both sides. You know, literally since the first week of September, Barry, his team, Debbie and Dean Jean, the close down team, have put in a huge amount of effort, and you know, really, from my money, moved the dial significantly in a positive direction on where the audit process is, and very many thanks to them. Equally, we've had a dedicated team which we're aiming to run through into 1920. I won't deal with 1920 in this report. I'll maybe come on to that for questions later on. And that is clearly proving hugely beneficial to the audit process. I think notwithstanding that, and notwithstanding some of the challenges that the close down team have been facing, it is a challenging audit to get through. On two fronts really. Firstly, that the volume of work is very, very high. that's driven by our materiality level, which generates the sample sizes, and you'll see some numbers of those quoted in the documentation. And then equally, because the close down team who are here basically are, for want of the work, picking up evidence and information which is sometimes contained in legacy systems, where the people who generated the initial work are no longer here, and that's a really difficult ask. I have to say they've stuck to that task incredibly well, and the fact I'm not here talking about an issue to do with books and records and getting the information, etc., which could well have been the case and which I have seen in other authorities, is a testament to the tenacity and professionalism of that closed down team. And I think it's really important to note that, because I know there's often been lots of criticism in the past around the audit process, etc. But what I'm now seeing is a world different from that. I list on page 5 of my document just the areas that are still outstanding. I'm not going to go through those because it is a very long list, which I would expect it to be at this point in time. We will come through to where we've made progress on certain aspects later on. I think key things which will take up the bulk of the time and where the risk is in terms of numbers is on clearly property valuation, testing. It's a large sample, there's a lot of estimation uncertainty in there. The other thing which I think is incredibly challenging for us is that we haven't been able to test the payroll using substantive analytical process, and broadly that means you get the number of employees at either an FT or numbers basis and multiply them by an average salary and have an uplift and various other things and get to about the figure you've got in the payroll. And we've not been able to do that because we can't get back to the data on FTE to test it properly, and therefore we've had to substantively test it, i.e. sample individual people. That produces a huge sample and takes a lot of time to do. That's the only way we think we can get the audit evidence. We've also got various samples of income and expenditure, debtors and creditors outstanding as well, and we continue to work on our value for money risk work, but that work is underway. I'm not proposing to conclude on that, but I think we'll get there with that fairly good order. And then clearly we've got our internal review process and consultation, etc., to get through. So there's a lot to get through by the 21st and before the 21st of February. But we've set ourselves that ambition to try and ensure that we get this signed off and move on to 1920 in an appropriate time frame. I appreciate this committee stops sitting at the 31st of March, and therefore you know, where 1920 goes will be a slightly different matter. Audit differences, we've identified a list of those a bit further on. They principally relate to a couple of ones we found so far in respect of long-term debtors and skills assets. I'm not proposing to go through those in numbers. That final list will come in the final ISA 260. I would expect there to be quite a few changes given the length of time that was held between producing the draft accounts and where we are now. And that wouldn't be a surprise, but we will work through that with management, and then we clearly need to get to what is the most efficient way to process those changes through the accounts, so that we're not doing things several times over. The next section too is a recap of our audit risks. I don't propose to go through this with you. We have previously been through this when we presented our audit strategy. The risks haven't really changed, well, they haven't changed at all. And they're still the key risks and the areas of focus. I'll move on to those in slightly more detail when I go through where we are on certain sections, but I just wanted to put them all in one place so you could see them if not quite at a glance, relatively straightforwardly. Moving on to the next section, which is section 3, page I think 16 of our report.
Before we move on, Chairman, could I just ask a quick question about the executive summary?
Yeah.
It says that one of the things that you're going to need is a signed management representation letter. I just wonder whatever that was.
Yeah, so that's a requirement which comes about through our audit standards. And what it is, it's a representation letter provided by management, which in really simple terms gets them to affirm that, frankly, there isn't anything that they haven't told us that they should tell us about. It's slightly more technical than that, but that's the ultimate thing of it. So it's the things, and it's designed to be the things that we couldn't obtain independent audit evidence from. So, for example, and given that the passage of time from 1819, you wouldn't expect there to be very much of that. But if for example, there was a huge big liability somewhere, a huge big dispute with a contractor which no one had clocked it, or it wasn't anywhere on the financial statements, it was just still in dispute, and there'd be no way we knew about it unless someone told us about it, frankly. It's that type of thing, Councillor.
And just for your assurance,
and it's a standard document.
Yeah,
it's a standard document.
We get to see it.
Yeah. Does that make the officers legally liable for that decision or that information they've made if they say something and at a later stage that becomes untrue? Is it their responsibility?
No, it doesn't. There isn't a legal liability requirement there.
So they could say anything then.
Well, typically it's sometimes signed by the chair of audit committee as well. Again, a bit removed, but let's assume it's signed by the management. So there isn't anything legal, but clearly what tends to happen is that the people signing that report is usually one of the statutory officers, and that statutory officer post comes with some public office responsibilities, which have got some legal standing. So if there was something that was said which was blatantly misleading and potentially fraudulent or anything down that line, it would be through those statutory officers' routes that you would proceed with that, if that makes any sense.
Yeah. Just to reassure you, Stephen, first of all, we do get to see the letter. Secondly, it's signed off by Barry. We know Barry, we trust Barry, but he also is a member of certain professional bodies which would dictate how he has to address this. Actually, I, as chairman of the audit committee, wouldn't sign it because I wouldn't have the requisite knowledge. Yeah. So, if I signed it, my signature will be of no value.
Yeah.
Because to sign a management representation letter, it means you have to have a lot of detailed knowledge. Yeah. Cecile, you've got a question on the management letter?
Well, yes. Going back to what you said, Stephen Lake, I think, and normally we always have those letters that is part of a proper audit. But I think it's unfair because, as we said before, we had such a turnover of officer. I mean, Barry will sign something that in 1819, if anything has happened, he might not have any knowledge. So it's a bit of an empty, as Stephen alluded to, because we had so much turnover and it's a big organization. Barry is not, will have to sign something that maybe he is stating what he knows, but it's the unknown that might make us go off piece. So what can I ask EI, what do they tend to do? Because to go back to Stephen Legge, Councillor Legge point, we have had such a lot of turnover that we might not know all the thing, and that is the problem we have. And for the 2 unitary, we need to make sure we have the best slate to go forward.
Yeah, and I think that's fair, and you know, it's not unusual that and it happens quite frequently, the person signing the representation letter wasn't actually there during the year in question when you get changes over in senior staff. So it's not unusual. We have had a huge amount. I think the key point is that I know that, you know, Barry will be signing this in the knowledge of the detailed work that his close down team have been undertaking. And I think that there is sufficient in there that if there was anything obvious that Barry was, you know, that had been uncovered, his team would have told him about that. There is always a risk that there is something sitting in someone's desk which hasn't hit any other radar, etc. That happens. All that doesn't say happen all the time, but that's always the risk, is that it's something there and no one knew about it. And Barry will, you know, sign in good faith with the knowledge that he's got.
Okay, shall we press on so we don't get over bogged down on that?
So I'll just move into the key areas of work, and I'm going to push through these fairly quickly and take any questions at the end. So one of the standard risks is, you know, incorrect recognition of revenue, and principally that tends to manifest itself in is inappropriate capitalisation of what should be revenue expenditure. Whilst we've got some significant reclassifications that we've found so far, we haven't identified any huge, any inappropriate capitalisation of revenue expenditure, which is a real positive, and clearly that was a huge area of focus previously from the previous auditors. That has not been the case in this audit. The same with the next one is revenue funded under capital statute, and again we've identified a couple of errors there, but nothing of huge significance, and we're pretty much through most of that, and you know, getting very comfortable with it. The next area is clearly a key area previously, where in effect the cut-off, so the movement from 1 year to the end of the 18-19 year, start of the 19-20 year, and equally the end of the 17-18 year and start of the 18-19 year. We haven't identified again any errors in respect of that cut-off work, and clearly you would expect us to, given the passage of time since the end of March 2019, that they would have come to light. Errors in respect of fraud and error, again, we've undertaken a number of procedures. We continue to work through those, but we haven't identified any errors in respect of this area. We've also reviewed the release of the Section 38 grants, which I know was the subject of much debate previously, and we're satisfied with the basis for that. The ERP implementation and update, we have looked at that, and we're satisfied in which the transfer of data has happened in terms of the completeness and accuracy of that, and we undertook some work with our IT experts to do that, so that's positive. Moving on to the next section, page 21, property, plant and equipment valuation. This is a big area just because of the size of it. We've not identified any errors so far within our work, but it is a huge sample. As you can see, 175 assets. We continue to undertake work on that. It is usually subject to quite a lot of challenge due to the level of estimation which can happen in the basis of preparation. Local authority asset bases are particularly complex because of the various ways in which those assets are valued. And it's always a subject of significant work for us. The next one is a very specific one, page 22, around the valuation accounting for the treatment of One Angel Square. Members will remember that we engaged on this as early as we could do. There are, I think, a number of issues that I think we're starting to conclude on. So the first is that the actual valuation basis. So the valuation basis was concluded on the 17-18 accounts, and it was included on the basis of what's called a existing use valuation. So, i.e., for want of a better word, it's an office block, and that's how you would value it. There were a number of ranges in terms of the valuation that were given by a number of valuers on this. It was valued at 37 million. Our valuers think that a more appropriate range would have been 27 to 35, but frankly, that 2 million is below our materiality level, and it's an estimation. So we're happy with that. I think then more fundamentally, the basis of valuation, the council took a decision to change the basis of valuation for that property, and instead of valuing it on an existing use basis, as in effect an office block you could put anywhere, they determined that actually it was more of a specialised asset because it's really only the one of its type in Northampton. There isn't really a readily tradable market for Grade A office space in Northampton town, and therefore valuing it on a depreciated replacement cost basis was more appropriate. We concur with that view, and our valuers concur with that view. A couple of other issues which arose out of that. So one is that in the draft accounts, the leaseback arrangement was originally accounted for as an operating lease. We believe, and management concur, that it's actually a finance lease. And then there's an issue about how the deferred income element of the actual transaction is treated. It was originally treated as a revenue item. We think it's probably more appropriate to treat it as capital, and be just concluding on that basis. So there's quite a lot in there. There's been an awful lot of work happened with that on various levels, but I think we're getting there with the actual factual treatment of that. The next slide, and I'll only pick this one up as other risks, is in respect of going concern. So
Steve, let me just start you, because Cecile had a particular question.
Sure, of course, I'll take that.
Yes, you go because Angel Square has been a sticking point for some time. So in layman's term, because basically you say the lease base should have been a financial lease and not an operating lease, that it should not have been treated as revenue and capital. What is the impact on the bottom line? So Barry, because if that is so essential in the way we signed the audit, and that has been a sticky point, what is the bottom line, and what was the risk for the audit not to be signed? Because frankly, if that is one of your major things, and as you agree now that between 27 and 35 million, so if it's on the upper side of 35 million, that is below the materiality, your materiality, it passes threshold. So my question is, what is the impact of what you said in a layman term on our balance sheet? Thank you.
Barry, do you want to handle that one?
Obviously, the note to the accounts will change because of the change from operating to finance lease, which we have agreed is the right way to account for this. We're still talking to EY about whether the receipt should be treated as deferred capital receipts or revenue, which we've treated as revenue. We're waiting for final confirmation of how we treat that. But the number we're talking about is £450,000 in terms of that receipt.
Yeah.
So if we agree that it's revenue, it will remain in revenue. If we agree that it's capital, it will come out of revenue and go into capital receipts, which will need a debit adjustment of £450,000 in revenue.
Okay. Sorry, Steve, you'd like to carry on again?
Okay, so the final point I want to pick up is in respect of the going concern assessment. This is complicated because clearly the county as a sovereign council, as all of the districts, ceases to exist on the 31st of March. So I just want to talk members through the process that we're going, or the assessment basis that we're going through, not only with the county, but with all the constituent bodies who will go into the 2U unitaries, because the assessment basis is exactly the same. So for clearly, by the time we sign the accounts, it's going to be a month or so to the end of the county as a sovereign body. So it won't be very difficult to get any view as to the position then. So clearly the big issue then is, well, what happens from the point of signing the accounts, i.e. the year, what happens with the new authorities. So in the world of local authority accounting, there is under, I think it's practice note 10, there is a presumption that councils are going concerns because their functions and operations are written in statute and they must continue. So there's in effect a step-in requirement for them to happen. So they can't just, adult and social care cannot cease to happen. It must happen in some format. So, but there will be a basis of going concern. Clearly, the issue then is the level of disclosure that yourselves and any of the other bodies can make in respect of the new unitaries, because clearly decisions regarding levels of council tax, budget setting, etc., whilst there will be planning assumptions, the decisions will not have been made until those constituent bodies are sitting and the decisions are formally made. And therefore, I think where we will get to is one where there will be an element of disclosure in respect of the basis, but clearly, there won't be anything in the public, won't be able to publish anything which isn't an official decision or within the public domain anyway. And therefore, I think where we will be is just around the level of disclosure we have in respect of going concern, just because of the nature of the change in, sovereign or bodies to the 2 new unitaries. But as I say, that is an issue which is being treated exactly the same in the other sovereign councils as it will be with Northamptonshire County. By the time we get to February, there'll be at least one of those already having been done. So frankly, the wording will have been done and agreed in constituent parts with those sovereign councils, because it's pretty much going to be the same wording. It's a rather unusual situation, and I'm happy to take any questions on it.
Can I ask, Chairman, just about this going concern basis, that the accounts that we're looking for the year 18-19, and is it possible for the auditor to sort of look forward to what we're looking at as year 2021? It doesn't seem to me to be relevant, particularly to the accounts for 18-19. And on the basis that the auditors are talking about, I mean, he could look at something in 10 years' time and say that there was going to be a going concern issue with that. When in 18-19, of course, we didn't know anything about these issues.
Okay.
Thank you.
So the going concern assessor, the accounts are based on a going concern, an assumption of going concern, i.e., and that means, in very technical terms, it means at least 12 months from the date that the audit report is signed. So we have to, from an auditing standards perspective, look at least 12 months ahead from the point at which we sign those accounts. So it's going to be into March, for want of a better word, Marchish 2022. We must make that assessment. And therefore the issue arises because the county won't be here. So the assessment only really relates to the basis on which the new unitary is being based. And as I've just explained, there's only so much you can actually say in public because decisions around council tax levels, budget levels, etc., will not have been made. There will be a number of planning assumptions in there because there has to be for it to be able to transfer, but they may not be able to be fully disclosed other than what may have already been put in the public domain.
Thank you.
Okay.
So I think you have a question, but just to explain how I see this. So it's actually the management that decide to adopt the going concern basis for production of the accounts. In the accounts, there will be a paragraph which describes in quite a lot of detail how management have come to that conclusion. And that paragraph will be more or less the same for all of the bodies which are going to form the new unitaries.
Right.
And to interpret what Steve's saying, I think, is he's saying he's content with that. And as auditors, all they will feel obliged to do is to draw people's attention to the paragraph which is written by management,
Correct.
which justifies why they've adopted the going concern basis of accounts.
Yeah.
I hope that helps. But Cecile, do you have a question?
Two things. One, if I understand correctly, in February, we are going to sign definitely the 1819, your 1819 audit,
Well,
the final.
As of the 17th of December 2020, that is what I am hoping, and that is what we're all working towards.
So, and the 1920, God knows, because we will not exist anymore. So by when it's going to be signed, and the 2021, it will be one unitary, I think it's the North. Now, about the going concern, am I correct in assuming that Barry has to make that judgment and as our office, section 151 officer, Barry is the only officer who risk much more than any other officer in the council. So because I think you are the only statutory officers that can risk jail if you do something very bad. So are we certain, because that is a problem, as you said rightly, Steve, a going concern is a very odd concept in terms of local government, because we cannot but be a going concern because our statutory. So the government is always going to bail us out, which is what they did in Northampton a couple of years ago. So Barry, are you satisfied that we have our finance in the best possible things, that we will be a going concern for the two unitary in 2021-22? Thank you.
Barry, would you like to answer that, please?
Thank you, Chair. I think Councillor Irving-Swift has hit the nail on the head. It's the clash of the private sector concept of going concern to statutory bodies. And it obviously, if a private sector company wasn't a going concern, it would go bust and go bankrupt, whereas a public sector body cannot be dissolved except by statute. So in terms of the concept of a going concern, obviously this council's made improvements that we've talked about over the last 3 years, which has led us to a current financial position, which is a lot more robust than it was previously. However, in terms of going concern, the going concern is carried out by the transfer of the statutory functions of this council to the two new unitary councils. So the statutory duties that we've got in terms of, for example, looking after children, educating children, looking after adults, will transfer on a going concern basis to both North and West North Hampshire councils. So on that basis, I would be signing off the accounts as a going concern, but recognising all of the comments that Steve's made about the complexities around this, and you know, I think it's It's an issue that if we get it wrong collectively could be picked up by the press in a way that is different to what it was intended. So we just need to be very careful about how this is worded and how this is managed. But from my position, the county council is a going concern because its statutory functions will continue under a different guise of two different councils.
And just to add one further comment to that, if you think about, so I think the position in relation to 1819 is pretty clear. If you think about 2021 as the third of the 3 years, as I understand it, actually that will go to the west. The obligation to complete the legacy accounts will actually go to the west, and it will be the CFO of the west who will make the judgment on the basis of the accounts, and it will be the audit committee of the west which will have to worry about that.
That's correct, Chair.
Cecilia, one final point on
Sorry, I said the north, but it was the west that was responsible. Also, one thing with your going concern, one of the things before that about value for money, because the going concern we have addressed about value for money. Do you think all our transformation program have given us the best value for money, and going forward, therefore, the going concern is a much more stable base as it would have been 3 years ago?
Okay. Well, I'll tell you what, that kind of takes me onto the value for money tab, which I think is page 34 of the document. And again, councillors have seen this document before. And again, just to remind councillors that the value for money concept, the value for money period. Again, and this may seem a little odd, but just how it works in the regulations, we can only make that assessment for 18-19 from the 1st of April 18 to the 31st of March 19. So that's the base. So I'm basically looking back and considering the arrangements that were in place during that period. And that is not even the same as saying this is value for money or not. It says, were there adequate arrangements in place? I think it would be fair to say, whilst we're undertaking this work, is that if you went back to 17-18, where there was an adverse value for money conclusion, and I won't regurgitate all that was in there, because you've already seen that, but I would describe that the council will have been on a journey during the 18-19 year and the 19-20 year, and continues into the 2021 year. And therefore, it would be quite unusual to go from having an adverse conclusion in 17-18 to everything being hunky-dory in 18-19, when clearly arrangements and transformation was happening, as you say. So I wouldn't expect it to be clean. I expect there will be some qualification in there, and I'll keep my powder dry in terms of where that is, but that's where I would expect to be in that conclusion. I think the important piece, though, is to try and draw out as best we can within the regulations things, some of the positives that have happened and the progress that has been made, as far as we reasonably can within the guidelines of what I'm supposed to conclude on, so that people have a picture of that. Clearly that will also develop in 1920 and 2021 as well. And therefore, in respect of 18-19, I cannot comment in respect of things that will have happened in 1920 or 2021, however useful that may actually have been, and I understand that.
Barry, do you want to just add something to that?
Just to add to what Steve's said there, I think the direction of travel is positive, but we need to recognise that one of the limiting factors that we've got is an inadequate Ofsted rating as well, which will always be taken into account in the value for money assessment.
Yeah.
Okay, Steve, back to you.
Okay, look, I think the only other thing I think I've touched on adjustments. The next section is internal control recommendations. Again, this is an area which will develop management. I'm sure we'll respond to that. The main things there we draw out are in respect of journals, We know that management are aware of those and will put those right. We will additionally make some additional comments in respect of any of the control issues that we identify as we go through. And then finally, independence of fees, section 7, again, the indicative code fee, or fee for the code of work. We estimated at planning is 600,000. We think it continues to be in that region. We are updating that on an ongoing basis, and we have got a process agreed, and this is where Barry can only say so much, because ultimately the fee ends up being agreed formally by the commissioners under their responsibilities of finance and with the PSAA as a contracting body, is that we'll be as open and transparent as we possibly can on the hours that the audit has undertaken and where those hours are, and come to what I believe is a fair fee all round for the work that we've undertaken. You know, it's an unusual set of circumstances coming into this audit, and continues to be so as you run it out. And I think all we can do is just be transparent.
Okay, any questions on that final point or the report in general? Cecile, you've got 6 fingers up, so
yeah, sorry.
I'm concerned. But you go first.
Just one thing about the audit fee. Now, what I am not very happy is, you know, we are a council that was on their knees, and your fees have going up and up and up and up. I think with Angel Square, all that issue, and Barry, if I understand correctly, the difference is £50,000 one way or the other. So if we incur £100,000 of extra fees for all the work, it's not value for money, as far as I'm concerned, for the taxpayer of Northamptonshire. So could we have the insurance that you can agree from now on the fees with Barry and not have any surprises, because we are counting every penny. That is what we are for. So please, a plea from me, and I'm sure Barry will be very happy, that we agree and we don't deviate. Thank you.
Okay, I'll briefly comment on that. So I understand your obligation as councillors around value for money, and I get that and I understand that. Clearly, as the auditor, I have a responsibility to undertake the audit to the auditing standards that I must undertake it to, and I have no leeway on that. You know, the costs that we've incurred to date, we're sharing with Barry, and we'll agree an interim position. I don't think it's possible to agree a fixed fee on this audit. There is still so much to do, and all I've said is we will be as transparent and as open as we can. We have given a best guess estimate, but to say this is the number, and equally, Cecile, is that you wouldn't want us to agree a fixed fee and then find that it took us less than that, would you? You wouldn't. That wouldn't be value for money either. And therefore, I think it's a case of, you know, what the time we incur, agreeing up front with management as far as we can in the context of the work that's undertaken, and to do that, you know, just to give you a level of granularity, we're down to sharing, you know, hours that have been worked, etc., with management and on specific areas, so that they've got transparency over that.
Thank you for that. Any questions, comments on anything else in the report from any of the members? No, you've stunned us in silence. Barry, do you want to make any comment at this point? Oh, sorry, there's one from Stephen Legg. Let's just deal with that, and then Barry, I'll ask you if you want to say anything.
Could I just ask, we've been told by the Cabinet that there are some significant reserves and provisions from previous years that need to be added back in that could make a difference of several million. Is that still going to be the case?
That's probably one for you, Barry, I think.
I'm expecting minimal adjustments on revenue. There may be adjustments to value on the balance sheet, but I'm not expecting that to increase reserves or provisions.
Yeah. So they're not going to run into millions or anything.
Certainly not revenue or reserves impact.
Okay, thank you. That was my question, yeah.
Good. Anything else you want to say in relation to this, Barry? Just give you that one final chance.
I think it's a more positive update report than we've had previously, certainly for the reasons that Steve set out. Both sides have increased resource on this, and I'd like to pay tribute to Debbie Middleton and Jean Stevenson and Uday on the team who have worked their socks off. Long hours, weekends, to increase the pace on this. It has been a grind. I can only describe it as a grind because we're down to transactions because of the materiality level, life volume of transactions. But what I would say is that I think collectively we can see light at the end of the tunnel now for this audit. And whilst, if you wind back 4 or 5 months ago, it seemed a very long, dark tunnel, I think definitely there is light at the end of the tunnel.
Yeah, I'd agree with that.
Mr. Taylor, you one further point?
Yeah, just one thing, because Barry said something important. All this long work was due to transaction and so on. So now we have, for the next 1920 audit, we should have cleared all that, so it should not be informed. So it would be a much quicker audit, if I understand correctly, because you should have cleared all your questions in 1819. So is that any way that we can advance the 1920 audit? Because you should have done quite a lot of your granular, as you'd say, finding, and that you should just reassure yourself for 1920. Thank you.
Okay, so yes, I agree that some of the challenges that we've had this year around legacy information, etc., data, we shouldn't encounter again, and so therefore, we would hope and expect that 1920 is a lot smoother process. We still have to undertake the work we have to undertake in accordance with the account auditing standards, and that's to a certain level, but I don't think it'll be anywhere near the kind of baseline audit approach we've had to undertake this year. I think in the context of advancing it, we've got, I think, a shared plan, and I think it has to be a shared plan between ourselves and the close down team, because we can't do the audit at the close down team and just expect them to respond when they're dealing with other things and they have other commitments as well, and therefore we've got a shared plan. I think we've agreed that we will commence the 1920 audit process at the back end of January. I don't envisage that it will be complete. It will not be complete by the end of March. It would not be possible to do that within that time frame. And the last thing we want to do is to detract getting 1819 over the line by focusing on 1920, when in effect you've got the same close down team dealing with the same years and the same audit team dealing with the same years. I think the one thing that we've all identified, which is probably a bit self-evident, is once we've got a consistent team on both sides and the right team, that's made significant progress. So yes, I think we can get 1920 closed earlier, but it ain't going to be by the end of March.
Okay, so just to summarise where I think we are on this, I do think this is a very useful and positive update. The three issues which are key judgmental issues, sections 38, OAS and MRP, seems to me are all substantially agreed, so that's great to take those off the table. I think in respect of 1819, we understand how we're going to be dealing with going concern, which is useful. I suspect the 1920 accounts, as you've just described, are heading westwards and won't actually be our consideration, but I think a lot of progress has been made. I think certainly personally, and I think the committee too, would like to thank Barry and particularly his team who have actually turned this around, and wish them the very best for the new year, because it's clearly going to be a busy time for them in January and February. So we wish them the best of luck for that. So with that, are we all happy to note the report? Let's do the roll call again. So Councillor Irving Swift.
Noted.
Councillor Legg.
Noted.
Councillor Osborne.
Noted.
Councillor Parker.
Noted.
And Councillor Scott.
Noted.
Brilliant. So we've got no urgent business. So thank you very much for your attendance and contribution. The time's now 11:46 and I can declare the meeting closed.